There's a lot of kids and a lot of people on Wall Street Bets who have made money to pay off their mortgage. I read about a post yesterday of a kid that was able to pay off his entire student loans and posted it. That's amazing progress.
Are they not? And do you think it's responsible for you and some other big names who tweeted about it yesterday and to get involved yourself, knowing that you guys are considered the Pied Pipers, that people are going to follow you into these trades and someone is ultimately going to get hurt after you and others are long gone, Chamath?
Dude, where was that message in 2008, Scott? Really? I mean, that's a joke. For example, let's look at Tesla. Who was right on Tesla? I'll tell you who was right. Every single retail investor. I was right. Elon Musk was right. Let me tell you who was wrong. Every single hedge fund. Name after name when it comes to innovation, when it comes to growth, when it comes to people trying to do fundamentally useful things in the world. If it doesn't fit into the mold that Wall Street wants, they try to organize against it.
This idea of, somebody's going to get hurt. You sound like you're an advocate for the little guy, so to speak, right? But yet by getting involved, why did you get involved in the first place? I mean, you said that to get information. I mean, you wanted to make money on the trade. Come on, right? You wanted to make money.
To move the needle, I need to strap on hundreds of millions of dollars. So I wanted to learn. Why did I want to learn? When I saw that article in the Wall Street Journal, I had no idea about Melvin Capital, really. I had no idea about Wall Street Bets, really. I had no idea about GameStop, except that it had been mentioned to me in a couple of tweets throughout the year. So I tweeted out after I read the article, hey, folks, tell me an interesting trade that I can put on tomorrow for a few $100K so I can learn, basically. That tweet got 10 million impressions and 13,000 comments. And when I went through there, a lot of people pointed to GameStop and pointed to Wall Street Bets. And when I went in there and started to look around, what I thought is, my God, here is a dynamic about trading, about momentum, about stocks, about short interest, about gamma squeezes. These are not things that I know a lot about. And so I put in a small position to learn. And what I learned is that people can do fundamental research, come to a point of view that's diametrically opposed to organized capital, and they can be right. And I'm allowed to be on the right side of that. It's not my job to go and defend a bunch of, highly compensated hedge fund managers against losses. And just the fact that for one time those folks lost, we can bellyache and cry on national television, to me is a joke.
The only thing I'm concerned about is that there are inevitably going to be people who get hurt. I'm not talking about hedge fund managers. I'm not talking about them. I'm talking about the people who follow people into the trade, who think that this stock is going to continue to go up because that's what they've been conditioned to think in the pandemic.
What should we do?
Because all stocks go up, apparently.
What should we do? Not allow folks. Here's what will happen if you follow your logic, then you'll say, you know what? Retail doesn't know what they're doing. I think you're wrong. Then the thing will be retail shouldn't be allowed to participate in the stock market. I think you're wrong. And then you know what will happen, Scott? The inequality gap will grow and grow and grow. Because then what are they supposed to do then? Buy an ETF, a passive fund? They can't buy into hedge funds because the rules don't allow them to. So now systematically what you've done is you entrench poverty.
No, I mean, that's taking it too far. This is just accentuating those thoughts that Wall Street's a casino and nothing more. That's what this is perpetuating.
I don't think so. I think this is an example of if you are going to so massively oversell a company to the extent that you're selling 40 more shares of that company that don't exist, and all of a sudden other folks are like, hey, wait a minute, this is going to get squeezed, and they buy it, that's just a smart trade. Retail saw it. Wall Street missed it, and they paid the price. So maybe, to your point, Scott, what regulators should do is say, hey, wait a minute, how can we allow companies to be 140% short? That doesn't make any sense. Maybe that's what should happen.
Basting anybody, okay? I'm glad these people are making money. That's the way it should be. That's the way it should be.
Let's face it. No, you're not, okay? And, the person that was on before you, no, she's not. And that's the issue. It's like because the rules are changing underfoot, people don't like that. Now, I'm not saying that there can't be better regulation, okay, and there can't be tighter rules. I get all of that. But what I am saying is that you have to be cognizant that we are moving to a world where normal, ordinary folks have now access to all the same information as institutional organized capital. And they will come to many of the same conclusions. sometimes at the same time, oftentimes faster, and sometimes to the opposite conclusions. And sometimes at the same time, sometimes faster.
Okay.
You will see more volatility like this in the future.
I want to see...
Solution, hold on a second. The solution to this is more transparency on the institutional side, not less access and ability for retail. I wanted to announce that I'm taking all the profits that I made, plus my original position. So I'm going to take $500,000, and I'm going to donate to the Barstool Fund for Small Businesses.